Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today's July 7th, 2015. We had an interesting day today. We had a just maybe, we put in a low today. And remember from last night, I talked about the probability that this week will mark a weekly bottom. Well, I wish I was able to pinpoint this morning as a low, but nevertheless, we had, we'll have to see if we get follow through, but we had a bottoming tail today. And this is definitely a bona fide bottoming tail. And the way you know it's a bottoming tail is really two things. Number one, you've got to have significantly more than average volume, and we did today, 174 million shares against 108 million average. And the second item is you really have to finish the day with the body of the candle in about the top 30%. So here's today, the green portion, the body of the candle is within the top 30%, and that qualifies as a bottoming candle or bottoming signal, bottoming tail. So that's good news, and we'll have to see if we get follow through, but there's still a couple of items and a couple of hurdles that we have to get over. First item is the head and shoulders pattern. We can certainly just stall out right at this neckline and then certainly trade lower after that. Or preferably, I'd like to see us gap up tomorrow over the neckline of the head and shoulders, and that would send the market on a rally. No question in my mind. Okay, the market right now is looking for an excuse to rally. It also could be looking for an excuse to sell off, but it's looking for an excuse to rally. So, we wake up tomorrow and we have bad news of some sort, all bets are off. But if we wake up tomorrow or the following day or at any point in time, if we get the hint of positive news, and it's not positive news in terms of Greece, it's news, really the positive news we're looking for is for it to be over. Whether Greece is leaving the euro or getting another bailout or another kick the can down the road, who cares? The market wants it to be over. It doesn't really give a hoot what happens because, as I've been telling you and as you really understand, I know you do, there's no significance to the economic impact of Greece. It really just isn't. Maybe in parts of Europe, maybe there is, but certainly for the global financial marketplace, it's nonsense. It's garbage. I'm telling you, it's the size of Microsoft. If Microsoft went bankrupt, that would be terrible for Microsoft, but would that send the global financial markets in a spiral? No. Maybe for a day or two, people would get nervous that other companies were going to go bankrupt, but all in all, it's one company. This is one little country with no economic development, with not a lot of imports, not a lot of exports. It doesn't matter. I mean, I'm not saying Greece doesn't matter. Greece is a beautiful country. But they've been bankrupt, like, how many times? At least 4 times over the last, 100 years or something, or maybe 200, whatever it is. They go bankrupt every 50 years if it's 200 years. It just doesn't matter. Okay, soapbox. We're off the soapbox. Okay, so what happens from this point forward is pretty clear. We've got to get over this neckline of the head and shoulders pattern. And more importantly, if you look at this big red candle here, okay, the high of this candle is 208.82. We've got to close the day above 208.82. And if we do, then this market has a chance to run to the old highs. Do we have a chance to make new highs? I'm suspect of that right now since we had really a lot of damage done on the downside for the time being. But and the reason is because we're going to run out of time. And I'll get to the time later. You don't need to know when now. But there will come a time shortly that time will be up for the market to rally. And we will certainly see further selling this year. No question, no two ways about it. But can we make new highs before that happens? We have to see what, if any, kind of thrust we get off of a rally. And then I'll be able to do some calculations and let us know if we're able to make new highs or not. Right now, we don't really need to know that. Right now, the first order of business is getting above the head and shoulders neckline. The second order of business is getting above, 208.82. I hate when that happens. Again, you know this always happens on my charts. 208.82. We've got to close the day above 208.82 to get any kind of rally mustered up here. And that's basically the bottom line in the spider. There's just nothing, there's no two ways about it. Really, the same applies in the E-mini contract. The numbers are different, but the same rule applies. Okay, even though we're above the head and shoulders neckline, you know what? I didn't look at the, bear with me, we're going to do some real-time analysis. I didn't look at the actual SPX or the S&P 500 cash index, and I want to do that with you now. And let's see where we are relative to the neckline there. Let's draw it in. Isn't that annoying? Soon I'm going to change charting softwares because that really pisses me off. Yeah, we're above there. Okay, so now we've there again. We've got 2 out of 3. It's just the spider that's not above it, and you know why? I actually figured it out. I should have realized this last week, but I didn't. The reason is because the spider pays a dividend. So it paid a dividend a couple of weeks ago, and when it pays a dividend, it takes down the price of the spider, and that's the reason that we're below the neckline and the other 2 indexes are above the neckline. I should have known that, and I apologize. It just slipped my mind, and that's my fault, my bad. But nevertheless, finally caught on to it. So I apologize for not noticing that before. That's my fault. So either way, we're still below the neckline. I don't care what the reason is. We're still below neckline. We have to get above the neckline. IWM. I would have liked to see IWM stronger today, although look at this tail. I mean, this is a big deal. Just for fun, I want to draw in an oval because I figured out how to do this. Never mind. So we had a big tail today on volume. Now, we didn't finish, strong in terms of at highs of the day, well, we did finish at highs of the day, but we gapped down. But this is definitely a bona fide tail. You had a bona fide tail in the spider chart. A lot of stocks had tails today. I mean, just if we digress for a second, look at Alibaba had a tail today. What else did we have? Well, I can't think off the top of my head. But Alibaba had a tail. A lot of stocks were strong today. And so this, this may have been the bottom. We'll have to see. We need to see follow through. Just real quick, back to the spider. We need to see follow through on the upside for it to be the bottom. And if it is, you're looking at 2-3 weeks of strong rally in the market. So you want to participate in that. All right. Let's go over to gold. Weak. Gold was weak. Gold hit a low today of 46, I think. 1146.80. Now, again, nothing's changed. We have to see gold trade above 1174 for it to muster any kind of rally on the upside. There's nothing new. Could there be lower prices? Sure. If we continue to close down below, like, for example, this 1155, then I believe that we're going to see lower prices, and we can see 1130, 1135 in short order on gold. I wouldn't short the market because I don't have a pattern to short the market, but could you see lower prices? Absolutely. So now you have 2 hurdles. You have to close and remain above 1155, okay, on a daily chart basis, and then you have to get above 1174. So the hurdles are getting tougher and tougher and farther away, and it's looking like we're going to see lower and lower prices. So there's nothing to do in gold. We've got to see a pattern. We've got to let the charts tell us what to do. Let the chart tell us what gold prices want to do. Right now, it's not telling us. I'm just giving you the calculations that I have in terms of prices on the down and the upside, but I don't have a pattern telling us this is going to happen. Until we do, we just don't trade it. We trade other stuff. Okay. Well, this was August. Pardon me. Oh, no. We are in August gold. It's been a long day, folks. I'm sorry. So that's correct. And let's go over to oil. Oil had a reversal today. It was low. Oil was $50.50, give or take. That was low. And is this a bottoming signal? It could be. On volume, certainly could be a bottoming tail, but we've got to see follow through in oil. I thought I took this off last night. I did take it off last night, and it went back on because I didn't save the chart. Bear with me. Okay, I'm saving the chart. I apologize. Okay, so one way or the other, we have to see a pattern emerge in the price of oil to tell us whether oil is going to trade higher or not. Right now, I would say that this is most likely a short-term bottom, and there's most likely higher prices coming, and we can certainly get back up to the $55, $56 if we get a rally in oil. But I'm not sold one way or the other yet. So we've got to let the market tell us what to do. So if we don't have the trade, we just move on to different markets until we have clarity in oil. We don't have clarity in gold. We don't have clarity in oil. But as you can see, we're beginning to get clarity in the stock market. And if we can get clarity in the SPDR, the SPY, the ES, the SPX, whatever it is, this cash index, whatever it is, if we see follow through, then I think it's off to the races for a while and we'll see much higher prices. We have to see something like that telling us gold and oil are doing something, whether it's lower or higher. Right now, we don't have it. If we see follow through tomorrow in oil, maybe so. We'll see it. We'll know it when we get there. Last night, I told you that today, it was yesterday, I had as a top in the bond market, and we actually had follow through on the upside. So you know that those tops and bottoms are always plus or minus a day. So we'll have to see if today marked the top. I'm trying to get to the daily chart. But as you can see, we jumped over the top of our channel, went right into the 50-period moving average, and pulled back. So the question now is, will lower prices only take us to the top of our channel and maybe make a bullish consolidation pattern for higher prices? That remains to be seen. So we've got to let the market tell us what to do. So there's no clarity in the bond market just yet. But I would say then you have to just kind of use the common sense part of this thing for now in the bond market. If in fact we're going to see higher prices in stocks, and we're going to see if higher prices are coming in stocks, I'm just going to flip over to the dollar. Now remember, I was saying that the target on the dollar was 97.75. We started to make the move today. We closed above this high, which tells us that we should get to this level. And if we do, and we start to pull back off that level, we'll probably see lower prices, and we may not get to that level, by the way. So if we start to pull back in the dollar, we should start to see lower prices in bonds, and we should start to see higher prices in the stock market, and potentially higher prices in oil. So we'll have to see how that all plays out. But, we jumped over there today in the, jumped over the channel in the bonds, and went into the 50-period moving average and pulled back. So now we'll have to let the market develop. If it puts in, 3, 4, 5 days of sideways to down, maybe coming right into the top of the channel, that would signify a trade to the upside. But we don't have that yet. We'll have to wait for the market to develop and tell us what to do. We looked at the dollar. You got the picture there. We're moving up to the high price, or to our target price. And how about, what do we have in, no, not copper. Copper got hammered today. I wanted to look at natural gas. Okay, so where are we in natural gas? Interesting price level. 2889 was the low, 2741. Where do we close today? 2726. That means that trade is off the table. It's not saying higher prices aren't coming. It's saying the probability of higher prices are no longer in our favor, and therefore I don't want to be in the trade. Okay, I'm not in the trade. But if I was in the trade, I don't want to be there because the probability, so as long as price stayed above the low of this candle here, that means that the probabilities are in your favor, higher prices are coming. So we closed below there. So the probabilities changed. Now the probabilities are no longer to the upside, trades off the table. I'm not saying lower prices are coming. I'm just saying don't be long the market. The probabilities are not in your favor. It doesn't mean higher prices aren't coming. It just means you don't take the trade because you don't have the odds in your favor. That's all this business is about. It's about putting the probabilities in your favor. And when they start to diminish, when the probabilities start to diminish, we no longer want to be in that trade. There's plenty of stuff to trade. We don't have to trade natural gas if the probabilities are not in our favor. So that's that. That's natural gas. We're going to let that market just play out however it's going to play out. I think I'm going to leave it there tonight. We did the stocks, we did bonds, oil, gold, the bonds, we did natural gas. That's about it. Let's leave it there tonight. I'm David Frost, my strategic forecast. We'll be back tomorrow with an update on where the market is. Hopefully, I'm hoping it gaps up over that neckline. That would be all green signals, all systems go for a rally, for one more rally before another sell-off in the market. So we'll leave it there tonight. Thanks for tuning in, folks.